The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.
Good evening, ladies and gentlemen. I'd like to welcome you to our second season of our Virtual Investor Forum. I'm your host, Dan Theok, Senior Vice President of Investment Banking. And today's topic is JMMB Group Limited. That means we're joined by none other than Group CEO Keith Duncan, who I'll be introducing to you formally in just a minute. Also on our panel, we should be joined by our Executive Chairman, Christopher Berry, later in the program, and I'd like to apologize for the absence of our CEO, Gary Peart, who is unable to join us. We urge our viewers to stick around until the end of the program, as we'll be announcing winners of today's giveaways, courtesy of JMMB. We'll also be taking your questions from social media, so remember to ask your questions in the live chat, and we'll get to them at the end of the program. If you're a fan of the content, subscribe to stay updated with our uploads. Be sure to hit the bell to receive all notifications. We publish videos like this once a week. And if you're looking to embark on your very first investment journey, take that first step with Mayberry Investments Limited. Follow us on social media today and before you get started. Okay, so Keith,
yes, sir.
Welcome back. Great to have you.
Thank you very much. I'm going to move in.
Excellent. Okay, let me do the formal introductions.
Yeah.
JMMB first opened its stores in November 1992, and it was the first of its kind in Jamaica. 30 years later, the company has evolved from a single operating entity to the JMMB Group. Now a financial services group of companies, it services over 460,000 clients and their families in Jamaica, Trinidad and Tobago, and the DR. The group continues to deliver personalized financial solutions across banking, investment, and insurance brokerage services. Keith Duncan. Well, Keith, as we all know, is the group CEO, and he's an executive director of the group. And he has responsibility for overall performance and charting the strategic direction of the group. He's a former president of the Jamaica Securities Dealers Association, and he continues to contribute to his service to Jamaica through various roles, including his current appointment as chairman of EPOC, the Economic Program and Oversight Committee. Well done there, Keith. Exceptional work. His financial expertise has benefited not only the JMMB Group, but also the Jamaican financial sector. Keith served as president of the PSOJ for the period 2019 to 2022, which was during an unprecedented time for Jamaica when we went through the COVID-19 pandemic. Today, we'll hear from Keith directly about the returns of JMMB. Keith, welcome again.
Thank you very much, Dan.
Back to the show.
It's a pleasure to be here and a pleasure to join those online.
Absolutely. Welcome, everybody. And I think just before the program, Keith, you gave me the great news of S&P upgrading Jamaica.
Yeah, to BB minus. I just heard myself while driving down. That's really positive news for Jamaica.
Excellent. I mean, I couldn't ask for more, and I think it's only going to get better over the next 6 to 12 months as we get inflation under control and as we see interest rates start to come back down. And Keith, I want to personally thank you for your exemplary work in EPOC. It was an exceptional program. Mm-hmm. I think it's an example. It's what makes us, Jamaica, a poster child for the IMF because we set targets, held the government accountable, increased transparency, and they delivered to those targets, and the result is a great overall macroeconomic environment. And I think this is the second upgrade that we've gotten in the last 3 years.
I believe so.
I think things are really going in the right direction. Okay, well, folks, I want to look at JMMB's financial results for the first quarter ended June 2023, which are definitely also going in the right direction. And so it looks like Keith has that Midas touch, and whatever he's involved with does exceptionally well. So on the first slide, we want to look at the actual financial performance results for the June period. And That'll show revenues, gross revenues up by 25% to $14 billion. Net interest income down 28% to 1.4 billion, and we appreciate what's been happening there in the rising interest rate environment and perhaps the reluctance to pass on those interest rates to their customers. We'll be talking about that with Keith. So we see some contraction in the net interest income line, followed by huge gain, 131% gain in their trading line. And we took note of the fact that we've seen some easing in DOM rep, and you guys have been taking advantage of that. So I'm waiting on the easing to happen in Jamaica to see how you're going to take advantage of that as well too to come, Keith.
Bated breath.
And we will definitely be talking about that in our Q&A segment. As a result, the operating revenue after net interest expense were pretty flat at $6.6 billion. We saw total operating expenses increasing by 9% up to $5.8 billion, and that's because of inflationary pressures and you guys planning and making preparation for some strategic moves, which again we'll be talking about later in the program. Yeah. And that resulted, therefore, in a net profit of $2.5 billion, a 217% increase. What's missing from this, guys, is the line item on the profit from associate, which relates to their interest in Sagicor Financial Company Limited, where they scored a $1.7 billion share of profits for this period compared to a $2.9 billion loss for the same period last year, with that loss the same period last year being a result of their first-time adoption of IFRS 17. So great results for the 6 months in terms of profits. Also, we see total comprehensive income jumping from negative $7.8 billion last year to positive $5.9 billion. Let's call it $6 billion. And so that's a result of the fair value adjustments of their debt instruments, which are marked through OCI, other comprehensive income. We saw a $2.5 billion gain in this period compared to last year, where we saw a $7 billion loss being passed through the OCI. So it's good to see, again, as interest rates are settling off, their fair value adjustments to their debt instruments are reversing. In fact, when we look at the total assets growth of 9% up to $679 billion, that's 9% growth, and the 15% growth in shareholders' equity to $54 billion. What's impressive about that to me is the idea that they still have a approximate $14 billion interest revaluation deficit. So again, the losses on the debt instruments have not fully reversed, and I expect them to fully reverse over the next 12 months. So that's $14 billion, which I expect to reverse through OCI, but onto the balance sheet and improving their retained earnings, their shareholders' equity position, I should say. Yeah. And so that, can imagine, $14 billion further improvement on top of the $54 billion would translate to over 22% growth that I fully expect to come back to shareholders' equity over the next 12 months. What's also impressive looking at the balance sheet is the strong growth in the loan book, Keith, up by 6% to $189 billion. That's approximately $35 billion growth in the loan book, while maintaining respectable levels of NPLs, non-performing loans, and expected credit losses. So it's not a case of them just, randomly writing out loans and the debt book is getting out of control and they're experiencing high levels of credit losses. It's far from that. Also to see the $30 billion growth in deposits up to $183 billion, and that speaks to the overall market confidence in JMMB and the fact that they're able to grow their deposit book by so much. Also, it's impressive to see the level of funds under management off balance sheet. Yeah. It just speaks to the strength of the JMMB brand. And so with $350 billion of investments on balance sheet, which represented about 5% growth, again, I think this company is positioned for significant growth over the next 6 to 12 months as we see interest rates trending down in Jamaica. And I fully expect by the last quarter of this year, certainly November, December, that with the inflation coming into check, and I just want to watch it for 2 more months, see the July and August numbers come out, perhaps September too, I fully expect central banks going to start easing off on interest rates, or the market confidence and expectation that the fall in interest rates will certainly be there by December. Lower interest rate means you'll see more trading gains for JMMB. It also means that we'll see PE valuations on the stock market increasing substantially. Main market average today is depressed at about 9 times. And we look specifically at JMMB. This is interesting. Stock price 27.71, which is pretty low for JMMB. It translates into a 5 times PE ratio when the main market average is 9 times. And that's depressed because I'd expect that to be 10 times when we see interest rates falling. So by my clock watch analysis, this is Dan Theok Mayberry speaking here now, we think JMMB is undervalued by at least 50%. So I expect in the next 6 to 12 months, you'll see the stock price trending closer to $45 to $50. A second point on that is the price to book. The stock is trading at a price to book of about 1 time, when we expect, again, generally, buying financial sector companies of this type to be trading closer to 1.3 times. And I mentioned that the book is undervalued by about 20% because of those valuation deficits that they have on the balance sheet. So again, 2 reasons why I think the stock is 30 to 50% undervalued, and I expect that trend to change in the next 6 to 12 months. Looking at the quarterly performance on the next slide, you can see that they pictorially did $2.5 billion profit for the quarter. The $2.6 billion loss, $2.2 billion loss that you saw 5 quarters ago was because of the large IFRS 17 adjustment that came through their Sagicor Financial Company, their interest in associate, where they scored a $2.9 billion loss. And so we see 4 quarters of good profitability and growth. And I fully expect that as interest rates trend back down, we're going to see more trading gains. We're going to see increased profitability. And I expect the quarterly profits to get back to the $3 billion per quarter type region. With that, the stock price could easily be $60. So even at $2.5 billion, if they were to keep that trot, I see it as a $45 to $50 stock. If they get back to the levels of profitability that we saw 18 months ago when they were touching $3 billion in a quarter, then it's a $70 stock. But I think it's definitely undervalued by about 50%. Yeah. Next slide shows sort of the trading in the stock price, and we can see it's been trading a bit down, as you can see. And again, that's primarily because they did have that hit to the results, and market confidence is being generally a little bit low in a high interest rate environment when you can earn 9% on risk-free government paper. We've seen sort of a lot of large investors holding a high level of cash, sitting on government paper, and that's definitely going to reverse. You're not going to be able to sit at home and earn 9% on government paper for much longer. I think we're in the last 6 months of seeing that type of high interest rate regime, and I expect that as central banks focused on sort of curbing inflation and managing inflation, as inflation comes into line and those interest rates trend down, I think in the next 6 to 12 months you'll see that 9% sort of rate down at 4-5%, and then you're going to see the stock market fly again. So it's just a matter of time, in my opinion. And I think, Keith, you guys have been doing a great job managing the business throughout these very difficult times. Wow. And I really look forward to the next 6 to 12 months for the stock market in general, but JMMB in particular. And, I looked throughout the market to see where can you find a great company that's growing, expanding, well-diversified, trading with a 5 times PE and a price to book of less than 1. And I could only see 2 or 3 other examples, folks. So this is, a very unique opportunity to get JMMB. I think if you can buy it at anything less than $30, you should run and buy it. I think by end of the year, it'll be up 15-20%, and in the next 9 to 12 months, it'll be up 30 to 50%. I have no doubt in my mind. Just in case you guys have any doubts, I got a couple of hard questions for Keith, which we're going to go through, and I think that's going to convince you guys as well. So first question, if you guys could put that up on the board for me, I think speaks to strategy. In terms of JMMB's strategic cost management framework, how does the group intend to improve your operational efficiency?
Yeah. So thank you very much, and that analysis was well done, and that speaks to your research team here at Mayberry.
No collusion here, folks. It's independent analysis.
Right. No, exactly, and I thought that it was on point. In terms of JMMB, let's go back. Can we backtrack about 10 years?
Of course.
And let's go back to 2012, where prior to that, JMMB was an investment house with one 50% stake in a commercial bank in Trinidad and Tobago, right? And a securities dealer in the Dominican Republic. That was the extent. JMMB Investments in Jamaica, which was primarily a money market operation, fixed income operator, and in Trinidad, 50% of a commercial bank. And as I said, they were pressed to the bolsa in the Dominican Republic. Since 2012, with the acquisition of the Capital and Credit Financial Group, we have diversified. This way, we had a deliberate strategy to diversify our business lines, getting into commercial banking, getting into funds management through the unit trust, getting into insurance brokerage. We had our insurance brokerage prior to also, getting into remittances. So therefore, we have been on a strategic path of diversification of our business lines, right? So we have had also the diversifying of our country risk by moving into the Dominican Republic, by adding on to that securities dealer in the Dominican Republic, our funds management business line, our pension administrator business line, and our commercial bank now in the Dominican Republic. And in Trinidad, we then moved to get 100% of the bank in Trinidad and Tobago since then, and then got into securities dealing also in Trinidad and Tobago, and also into consumer finance in Trinidad. So we have diversified across countries and diversified across business lines and become a total regional integrated financial institution. And we have also gone on to make strategic acquisitions with our 23% stake, the largest shareholder in Sagicor Finance, SFC, Sagicor Financial Corporation. So we have diversified our earning streams, we have diversified our business lines, and we're across countries. That is where, and now we need to pull all that together to really look at how we integrate, how we look to build efficiencies coming out of having all of these business lines. One of the things that we would have done in the last 2 years is to standardize our banking platform on Temenos T24. So all the banks operate on one platform.
Excellent.
Right? Then we are now looking to digitize and centralize operations. So you can imagine that we would have, as we picked up entities here and there, you would have operational groups within each entity. You would have management within each entity. So we build out a shared services model, a group structure, and then we also build in now are going to centralize operations across and shared services across the various countries to get efficiencies. Then, of course, we have to go with digitization because we have to digitize operations.
Yeah.
So with all of these various processes that occur across different ways of doing different things in say, banking business line or the investment business line, what we're doing now is standardizing processes. So therefore, you build efficiencies in. This is all work in progress. We have been working very hard at it. We have, there are challenges along the way, but at the end of the day, we know we are continuing in that to drive operational efficiency, because where we would like to see our group operational efficiency come down to is about 65%. We were on that path down to about 70 something, and then with the movement interest rates in Jamaica, DR, what you have had is squeezed margins on the net interest income,
Yeah.
and you don't have the opportunity to trade in securities because of the fact that interest rates are up, and therefore you don't have the market, the fixed income market basically went into a lull. So therefore, on the revenue side, we have been squeezed by the monetary policy within an inflationary environment, and we continue to work on our operational productivity and not only efficiency but productivity. So we're doing more transactions with the same amount of people, but we have squeezed margins. As we go forward into next year, and as we expect monetary policy to ease somewhat, then you will see our margins on net interest income and that trading that we do, both on the equity market and the fixed income market, to begin to return, and therefore we can get back on our drive for efficiency by continuing to standardize our banking operations, standardize our investment operations across the 3 countries, and also to centralize operation and to build out our shared services model even more.
Sounds good. Speaking of IT and infrastructure, your annual report mentioned investment in IT infrastructure and plans for a
Yeah.
mobile app for this financial year coming up.
Correct.
Is there any update on the development
Well,
of your mobile app?
can I tell you, no, that has been like the most annoying application that we have ever had to deploy, right? That mobile app, everybody has been like, every AGM and every investor briefing, we get the same question. And we were well down the road with the deployment of the mobile app. We were working with a vendor, which I'll not name the vendor, but they did not deliver the results. However, we went back to the drawing board and we are now on our way to delivering that mobile app. I don't want to give you a timeline, but we can tell you'll have a surprise at the our annual general meeting in October. All right, and we are very confident within this year we're going to deliver our mobile app. I must apologize to our customers and clients, right, because for the fact that we have not been able to deliver this, and we have made promises and not been able to deliver. But what we have been able to deliver is our IPO platform, our Moneyline platform, and now we have rolled out our Moneyline platform where you don't have to be a client of JMMB to use our mobile Moneyline IPO platform. Anyone can participate in an IPO. You don't even have to be a JMMB customer.
Oh, excellent.
So therefore that kind of deepens the market for us all. You know what I mean? And brings more investors to the table for the equities. Now, Jamaica has the most developed equity market and capital markets in the region, and people are looking to Jamaica for capital market activity to raise debt, to raise equity, and even while we have the challenges in Jamaica, but Jamaica is leading the way. In the same way we just got upgraded, our financial services sector is leading the way in Jamaica.
Absolutely.
Mayberry is a big part of that.
Thank you.
Right,
Absolutely.
from our equities. Mayberry is the equity. They're the lead and have driven this market, development of this market, and I have to acknowledge you guys for that. We're on your coattails.
I appreciate that.
Right.
And we look forward to it. The more, the merrier. So given the high interest rate inflationary environment and the global uncertainties, how does the company plan to allocate its assets to generate higher revenues in the following year?
What we're using now is what we call our risk-adjusted return on capital model. Okay, so we have to look at how we allocate, and we have to allocate capital to where we get the greatest return, risk-adjusted.
Yeah.
So you use your return on investment, you modify that for risk elements, risk to flows, your risk to your country risk, your risk to the business line, various risks that you use in calculating your risk-adjusted model on the various business lines. So therefore, our risk-adjusted model will suggest to us now that we should be looking to grow our banking business, growing private credit, growing our capital markets business, growing our fees origination market for deals, etc., investment banking, Dan, and I'm sure we'll be deals with you guys from time to time.
Absolutely.
So that's the area that we're looking to. So banking is, you have, on loans, you don't have mark-to-market, right?
Yeah.
So, on security dealing, you're looking at the revaluation reserve, and you saw where all the financial institutions have gotten hit on their bond portfolios as interest rates have gone up. You don't have that issue with them. You don't have that concern on loans, right?
Agreed.
And you also have spreads, wider spreads on loans than you have on a very saturated repo market.
Yeah.
So where do you allocate the capital? So you spoke about the fact that we have grown our loan portfolio significantly right across the group in Trinidad and in Jamaica and the Dominican Republic. That's where we are pumping and allocating a significant amount of capital, and that is where we see growth. And we are looking then to see how we can deepen even the secondary market for loans.
Right.
Right. So that's something that we will speak to at another date, but we're looking to know, how do you package securities, package loans?
Makes sense.
Right.
So Keith, tell me, how does the group plan to maintain the quality of its asset portfolio in light of that?
Well, so therefore in our risk models, which guide us very much in that regard, and therefore if you know where your risk-adjusted return on the various business lines and products, so we do a risk-adjusted our risk-adjusted return on capital model. We drill that right down to even the product. So when we book a loan, our originators have to go through and say, what is the risk-adjusted rate of return on this loan? And therefore, and we then have to adjust pricing to take into account the risk of that loan that you book or any investment that you put on book, you have to adjust. You have to adjust for the risk. That's how we protect capital, by ensuring whatever you put on your book, whatever product that you sell, that what you know is that this is the risk and you are being paid for the risk that you take.
Got it. That makes sense. Next question for me. In alignment with JMMB's smart growth strategy, the new infrastructure development fund will be implemented in the DR. Why not in Jamaica and TNT as well? And could you explain this to us?
Yeah. Well, the DR has different regulations, and through our SAFI, which is our mutual fund operator, we have our real estate funds. They call it the Infrastructure Development Fund. Now, you have to roll out a new fund for any new development that we're taking on. So it's just like a series of funds that you'll be rolling out. In Jamaica, we have our Optimum Capital Fund, which invests in real estate. That's a unit trust. And we also have our own proprietary investment real estate business line, where we're developing right now 100,000 square feet of commercial property across Jamaica, right? And that's a new business line for us. We got on a great resource in Tracy Ann Creary, who is leading that effort along with our executive team leader, Paul Gray. And that's a new area that we're getting to because real estate is really attractive. I see Mayberry is doing some business there also. So we're following your footsteps, right? And moving in that direction. So we're building out real estate and that real estate business line. And we have our real estate funds because investors are looking for stable returns.
Right.
And I think real estate is a stable asset and delivers, if it's lease income, rental income, or, even the fact that as we get an investment upgrade, then investors look at us as less risky. And therefore the value of your assets, whether it be equities, whether it be bonds, whether it be real estate, in the eyes of the investing public, internationally and locally, increases. The value of your assets should increase. Basis. So therefore, what you're investing for is increasing value in that real estate and flows from that real estate, which are really steady, and you don't have the, much downside risk to that, and you're in concrete and steel.
That makes sense. And so we had another question, I think, about how has the profit generation from that business been going from your real estate business?
Well, it's early days yet. We are monetizing. We had built up a land bank over the years, and JMMB being an anchor tenant in this land bank, and therefore we're now saying let us build on that. And therefore, what we're looking for is over the next 2 to 3 years that we can start realizing some profitability in that real estate area. But we're making the investments now. We're acquiring land and building out our land bank. So because the future looks good for Jamaica. Once we get our macroeconomic look good, we just got our S&P upgrade. And therefore, once we get the human capital side of Jamaica all sorted out in terms of upskilling our people, training them to for the new economy, then I think we'll be on a good path, and we take down crime and violence. And we have our pet project there.
Absolutely.
But we take down crime and violence in the medium to long term. Jamaica looks damn good for the future.
Can't agree with you more. Can't agree with you more. For the financial year 2022-23, operating revenue declined in Jamaica and the DR. How does the company intend to improve it for the next financial year?
So, as we know, from our net interest income lines would have declined because as interest rates have gone up, your cost of funds increase. As your cost of funds increase, if you have a fixed income portfolio, the yields on your portfolio increase, so your margin gets squeezed. So, what is happening in the Dominican Republic right now, where the central bank in the Dominican Republic has moved to reduce rates, they held the last time out, but they have moved twice to reduce rates. And they move rates down to, I believe, 7.75%. They're coming from about 8.5%, and they reduce 50 basis points and 25 basis points. So they're moving in the right direction, and they're easing the liquidity in the market. Because what's been happening is with the monetary policy, you not only increase interest rates, but you tighten up liquidity. You pull money out of the market, and therefore it's a pressure also on cost of funds because there's more competition for less money in the market. But however, in the DR now, we've seen a reversal of that. We haven't seen that reversal in Jamaica yet. I think our central bank may be a little bit more conservative, and they are looking for inflation to remain firmly embedded in their target range of 4 to 6%. That's where I think we're going. So, however, as you had said in the your introduction, Dan, what you expect is that over the next year or so, we should see the Fed going on hold and maybe looking to loosen up as the U.S. economy could slow down more than they want, and therefore they would begin to loosen up or reduce interest rates in the U.S. because the Fed is what is really has a grip on the world in terms of the Fed and their actions with interest rates and monetary policy, right? So that's one. The Fed is important.
Yeah.
The central bank in Jamaica is watching the Fed very carefully to see what the Fed does. If the Fed holds and has sent a signal that they're going to look more to ease monetary policy, then I believe our central bank in Jamaica and the central banks across the world will look to ease. Then the business, then you'll see more liquidity in the market, and we can get back to more normalized market conditions, which we expect going into next year, 2024 and 2025, and we see earnings begin to return. But in the meanwhile, we're diversifying our earnings, pushing our capital into the banking business line, pushing the capital into our money transfer business line, pushing capital into our securities business line, building out payment products and services like our ePay, building out like we're now launching our debit card. No, not our debit card. This is what we call our where you. And the name of the product is, or we're remitting, our remittance company is launching a product where you can remit funds to that card, right?
It's like a loyalty card, maybe.
Like a loyalty card, but it's it's a
preloaded remittance business.
You load up the debit card,
got
right?
it, got it.
And you don't have to have an account, so therefore people can remit money to that card.
Yes.
And you can use it for construction companies can use it for payroll, and then you bring people into the digital world rather than using cash. You know what I mean? It's a prepaid debit card.
Prepaid debit card.
Prepaid debit card. So we're rolling that solution out at this point in time, and we believe that will also bring fees.
Yeah.
And it will be a value-added product for clients, for our corporate clients that do business and have to do payrolls, rather than have to do cash. They just they can have these prepaid debit cards.
Yeah, definitely makes sense.
We also rolled out like an airport card, where you have to pay cash for some services at the airport. Now you can get your airport card and you can pay for the services at the airport rather than have to walk with cash. So therefore, JMMB is diversifying its payment solutions because these are fee areas. Value-added fees, because we don't charge nuisance fees at JMMB. Right? Well, we say we have value-added fees, cost recovery fees, and we are building out these fee lines. So therefore, you don't use capital for these fees, for these kind of services, right? And then we're also building out our off-balance sheet because we're saying clients, take a long view. You need to diversify your portfolios. You need to buy some real estate through Optimum Capital. You need some equities because now is the time to buy equities.
Absolutely.
For example, as you were pointing out, not only JMMB is undervalued, but the whole Jamaica stock market is a buy right now.
Absolutely.
And people should be buying at this point in time because you don't wait until the BOJ begin to reduce rates. You need to be ahead of the curve.
Absolutely.
And it's now that you should be buying when everybody is so concerned or the market is sold off. Is now when everybody is deeply concerned, that's the time to buy.
I agree 100%. And I really do think in the next 6, 9, 12 months, we're going to come back and laugh at how JMMB used to be at $27.
Exactly.
So NCB was at $70. I think in 12 months' time, we're going to laugh about this. There's a great opportunity, guys.
So nobody wants to look back and say, I should have.
Yeah.
Right? They're undervalued stocks right now that people should be jumping into. You don't have to jump in all at once, but now you should be beginning to get that position going. I know, those who have existing positions could have gotten hurt in the last year or two as the market sold off, but now is the time to really push your head out there and get in there and begin accumulating, because we're going to see, from my outlook, right, if there's no further geopolitical risk, and if inflation comes in check, then a year, 18 months from now, you'd be looking back and saying, I should have bought some more.
100%. I agree 100%.
You know
and I feel that way strongly about stocks like JMMB, NCB, even Scotia
Exactly,
Bank.
because where we're trading right now, most of the financial services are trading close to book.
Oh, absolutely.
And like JMMB is trading 5 times earnings.
Yes, that's insane.
I mean, JMMB based on the average financial services is at 11 times earnings.
Yep.
So if JMMB is earning, and we're trading at 5 times book and we're at 27, we should really be, if we're trading at where the average financial
55,
services
double
trading,
that price.
we should be at 55.
Double that price.
However, Jamaica has a lot, or JMMB has a lot of liquidity, and
Yes.
we have stocks in trade, we have shareholders in trade,
Yes.
and however, we know what we're implementing our share buyback program. We want to be able to provide a floor
Yes.
for that JMMB stock, by judiciously buying up JMMB stock from time to time. We're not, we have to manage that with our capital needs.
Yes.
But, I think we need to protect the value of the JMMB share.
Absolutely. So that has been implemented?
Yeah,
approved?
It's been approved in Trinidad, improved in Jamaica, and we're going to be executing.
I'm happy to hear that.
But we can't tell you everything, because you might go try and sell some, buy the stock. And sell
No. I think Mr. Berry will be a big buyer of the stock.
Okay.
You heard that, Mr. Berry? The
Yes.
floor is coming. Vision 2026 states the company's goal to expand into new geographies. Have any plans started regarding your expansion? Can you give us any?
Oh, definitely. We have our business development portfolio. So we're always looking for expansion. Some people think of JMMB as a value stock. We are a growth stock.
Right.
Because we're always looking for expansion. Some of our shareholders think that sometimes, why you don't just hold and just kind of just consolidate and build out the efficiencies, right? Our thinking is that we need to continue to accrete shareholder value. We need to continue to increase shareholder value.
Yes.
And therefore, we're always looking for opportunities. And as we moved into the Dominican Republic and as we made acquisitions in the same way we purchased a majority, the 23% stake in Sagicor, we are looking at other opportunities. And we know Central America has always been an area for us that we have kept our eyes closely on, and the Dominican Republic would have been our platform for growth into Central America. So we continue to look at opportunities in Central America to see how we move, because we have now the Spanish-speaking group within JMMB, and therefore we can build on the competence of the DR team and expand into new markets in Central America. So that's the plan.
Excellent.
Yeah.
Excellent. I think we've discussed this a bit, but let me ask one more time. How have your operations been impacted by the current economic climate? What changes have been made to adapt to the really consistently provide returns to your stakeholders?
And that was, as we said, as we look at where we allocate capital in our business, right? So we're looking to allocate capital to where, to the banking business line, to our portfolio business line. That means our off-balance sheet, our funds, our pension business, our payments business. So we are utilizing the business lines that we have built out and acquired to be able to diversify away from just the straight fixed income securities dealing model. That's what our diversification over the history of JMMB in the last 10, 11 years has given us the ability to move capital into new business lines and to existing business lines that offer greater returns for us. For example, banking.
Right.
Yeah.
And remind me, Keith, your funds under management off balance sheet, what's the figure? Is it like $180 billion?
In Jamaica, it's about 180.
180 billion.
Across the group is probably somewhere around 200 billion.
Yeah, I mean, that's impressive, quite frankly. Okay, folks, we haven't forgotten the questions coming in by social media, so let me take 2 or 3 of those because they're definitely piling up, and I don't want to ignore folks. First one coming in from Jerome. In the buyback notice, it stated that 10 million shares will be bought from time to time in the open market when the share price dips below its intrinsic value.
Right.
Can you be more specific about what that means? What's this intrinsic value? How is that going to be calculated, etc.?
Well, no, what I can say is intrinsics is, book. Where's book right now?
Yes.
And do you want your stock trading below book? This is all in the hands of our, we have kind of made this independent of I don't give direction around this. We have our Treasury Department that we know would be looking to execute in terms of where do they buy? They look at the technical levels,
Yeah.
where there's resistance.
Yeah.
And if you're going to break a resistance level on the downward path, maybe they would go in and buy at that level.
Okay.
But I would say if you could look at around book and to say, is that a good place where you want to be? Now, if you had a sell-off in the market, are you going to then use up all your dry powder to buy when the market is sold off? No,
Right.
you look for a resistance level, and that's
Yeah.
probably where you would look
Okay.
to pick up stock.
That makes sense. Second question coming in from Jerome. Are there any immediate or medium-term plans to do additional equity raises?
Well, you don't take anything off the table, right?
Yeah.
And if the market is favorable, like we did our APO, we did an APO at 38, so we might as well talk about that now
Yes.
because some people have that up in there.
Yes.
They're vexed about that,
You
right?
raised
kind of stuff.
$10 billion, had the man up
you
to
know what I
$14
mean?
billion.
Yeah, and then, so what happened was that when we did that APO, which helped in the acquisition of SFC,
Yes.
this was in like about September, October 2019.
Mm-hmm.
In the next couple of months, we're in COVID.
Yeah.
So the stock traded as high as 55
Yeah.
after the APO.
Mm-hmm.
Then we went into COVID.
Mhm.
Then everything sold off, right? And then as after COVID, I know we were starting to settle down and working through what was supposed to be transient inflation.
Yeah.
What occurred was that then Russia and the Ukraine thing started, and that was another bout of volatility.
Yeah.
And therefore, and then you had inflation as a result. Everybody remained the supply chain disruption
Yeah,
and inflation and commodity prices and wheat and everything that the prices went up, oil prices went up, and then we've been in this environment since 2020.
Mm-hmm.
We have all navigated this. Jamaican financial sector has navigated this quite well, outside of one player.
Yes. Yeah. Yes.
But I think Jamaica has navigated this quite well, sufficient capital, and, because there were painful points in this period.
Yeah. Absolutely.
Because no one expected interest rates to move from 0.5 to 7.5%.
Yeah. And be sustained for such a long period of time.
Or 7, right.
Yeah.
Mm.
Yeah. Okay, I appreciate that. Business Access TV asks, can you expand in more details on the factors that drive your expectation of interest rate reduction over the next 12 months?
That comes right down to inflation and inflationary expectations. I think the central bank has done a really good job of keeping the exchange rate stable, right? We have built up reserves, significant reserves, over $4 billion of reserves. We just got an upgrade, right? We see inflation. The central bank's projection is for inflation to come back within the projected range of 4 to 6% around December, between September and December. At that time, we expect the central bank would look to, and if the Fed is able to hold, the Federal Reserve, the Fed in the U.S., U.S. Central Bank is able to hold interest rates or begin to loosen up monetary policy, then we will see interest rates moving downwards towards late this year into next year. But this is all dependent on the geopolitics, right?
Yeah,
because
absolutely.
if something else breaks out somewhere or the Russia-Ukraine escalates,
Yeah.
then you don't know what the implications of that are or what could happen. But all, holding everything constant as where we are right now, I would think that towards the end of the year we see some interest rate reductions, and when we have interest rates going up, it impacts the economy.
Yeah,
it slows
absolutely.
down domestic demand. It slows down business. Consumers have less money to spend because they can't, because they have their mortgages to pay, they have them car loan to pay.
Yeah.
And when the interest rates go up, it reduces your discretionary spend, and then you can't make the investment. And it's the same for businesses. Businesses have to make allocation for their debt servicing. So when interest rates go up, then they have less money to spend on reinvesting and into new business lines and to expanding their business. So, we are hoping that monetary policy begins to change towards the end of this year and into next year.
Yeah, and I couldn't agree with you more. And we've seen the growth coming, which is pretty impressive, right? Despite this higher interest rate regime, we still see growth
And tourism is
improving.
doing quite well.
Tourism is doing exceptionally well. The government continues to reduce the debt to GDP levels, which in of itself creates more float and liquidity to put into infrastructure development, which again fuels growth. So we're finally in a virtuous circle.
We're in a growth mode.
Finally,
Yeah,
in
I
a
agree with
virtuous
you. I like
circle,
how you put it, Dan.
as opposed to what we had before.
There's a momentum being built. There's an
Absolutely.
underlying momentum to the economy.
Absolutely. And
Yeah.
so when you put that all together, I think our capital markets, which has already done exceptionally well, all things considered, and as you said, it's the most advanced in the region. Just imagine lower interest rates, more liquidity, and what that's going to do to the capital markets. So I fully expect next year to be strong for the market in general. We're going to see more
Yeah.
APOs, more IPOs, and then we're going to see a lot of the stronger financial companies, manufacturing companies. You're going to see the valuations coming back, and I really think any company that you see valued under 8-9 times now is a steal. I think you're going to see the main market reset and go back to 12 times by this time next year. And the companies who are also in a growth mode, they'll be rewarded even more so. And I agree, JMMB is definitely in a growth mode. And so for those of you who bought at 38, hang tight. I can tell you it's going to come back to you and then some. I think it's just a matter of time before the stock breaks the $50.
And we're paying a dividend in October.
Yeah, I look forward to it.
yeah. So that works.
Yeah. So I think it's just a matter of time. Okay. Oh, lots of questions here. Let me try to get at some more. Philip Burgess, will the prepaid remittance cards be connected to the bank account? And I think you said it.
Yeah. Well, we have a debit card, which is a Visa debit card, which
Yeah.
is linked to your bank account.
Yeah.
And we also then have a prepaid that's standalone.
That's standalone.
Yeah.
Okay, good deal. I think that answers that question. JMMB took over the DTI responsibility for ePay after the Alliance debacle. Somebody's answering
Yeah.
somebody about something.
Yeah, we're in a relationship with ePay.
Okay,
Yeah, and we're rolling out new products and services with them.
okay, good deal. So I
Yeah.
think we've spoken, Devon, to the timeline for the new mobile app. Keith promises us before the end of this financial year.
Yes, without a doubt.
Without a doubt. So we look forward to that, and I think we'll be doing good. Orville Reeves, what are your views on the World Economic Forum and their policies they are implementing on the world? What are your views on the World Economic Forum?
The World Economic Forum and their policies. Well, what I really don't necessarily look at, and I would have to speak to which policies that.
Yeah,
Give me a little bit more specifics.
I
But
think
what
so,
I know,
yeah.
what I take from the Economic Forum is their more economic forecasts.
Right.
In terms of if he's talking about digitization and the digital currency, I believe the world is going digital, and I think that we have to ensure that we remain relevant within the whole global financial, and just remain relevant as an economy.
Yeah, and I think it's something we should embrace, Keith, including all of the banks, because the number of unbanked or underbanked in Jamaica and the amount of cash in circulation and transactions that are done by cash really goes contrary to our ambitions to advance as a developed country.
That's correct.
And so I really...
And I think even at JMMB, what we're doing is we have a whole migration strategy to move clients online, and we have an onboarding program where that will be launched very soon, where clients can open their accounts online.
Oh, excellent.
And we're on, so we're migrating clients to the digital channel. And, we find that 60% of our transactions are done online at JMMB.
That's excellent.
But still, that's 30% of our hundreds of thousands of transactions that occur within the branch.
Correct.
And we're saying, but clients really like to come to JMMB because they just love the reception and how they feel when they come in. And, we have exceptional client care, if I must say, and I must acknowledge the team for that effort, because we have a focus on client experience. We have a new queue management system, which our Group Chief Strategy Officer, Claudine Tracy, is very proud of.
Excellent.
Because they know we can use it to track data and track and see where we have pain points. And so that new queue management system is in place now at this point.
Good. And last one for me. I know you guys were focused on SMEs and trying to cater to that market segment. How has that been going?
Well, SMEs, if you were to look in order of risk, right? Where the risk is. The risk is SMEs will be greater risk than corporates.
Yes,
Correct?
of course.
So, so we have been pushing that direction using our risk-adjusted return on capital model, and we have been able to really grow our SME business line, our loans to SMEs. We have a team that's focused on our SME portfolio and building those relationships with small and medium enterprises. So they would have gone through a fairly challenging period during that whole COVID period.
Yeah.
But now I think they, we have worked through, they have worked through the challenges, but we continue to grow our SME portfolio. I think at our annual general meeting, we can speak a little bit about the successes that we have had there. And then with our mobile point of sale, because we just rolled out point of sale product, the SMEs are now, they're now picking up on the products, on the point of sale product, and really putting it inside their businesses. So JMMB is building out that suite of products and services, and it's working well for our SME segment.
Excellent. And last, Project Star, how's that going, Keith?
Oh, excellent.
I'll give you a minute.
Project Star is like it's as we have the successes of our macroeconomic program and we're getting upgrades, we want to focus on our people. We want to focus on the most vulnerable and volatile communities in Jamaica, because we believe that every community in Jamaica can thrive. We don't just need pockets of success.
Yeah.
We need the entire community to do well. And Jamaican people are ready for it. They want to own it, drive it, social and economic transformation of marginalized, depressed communities. Jamaican people are powerful people,
Absolutely.
Right? To survive, how they survive through very tough conditions in inner city and rural poor communities and do well. Right? If we are to give them the tools, right? Because we're not charity, we're about development. If we give them the tools of development, they are going to shine, and Jamaica will shine, and every community will shine.
Well, thanks for that, Keith. I mean, JMMB is just a company I love and really respect what your mom, Joan Duncan, has done and established. And it's great to see through the foundation, you guys, what you're doing, and now this Project Star.
And Mayberry has jumped on board, and Mayberry was a catalyst also.
Absolutely.
And coming on board with their $10 million
always happy
Star.
to support, because at the end of the day, we're trying to advance the entire nation, right? That's what this is all about. Well, thanks for that, guys. As promised, we'll now announce the winners from our giveaway, courtesy of JMMB. And so I'd like to say congratulations to @AndrewFisher40, at Paget Jade, and at CHX Neek. Congratulations, guys. A member of our team will reach out to you and advise how you can redeem your prize. Well, Keith, that's been a great program. It's amazing how quickly the hour goes by. And so with that, that brings today's session to an end. And I'd like to thank our viewers, as always, for tuning in and for your support, which is greatly appreciated. Big thanks to Keith for stopping by today and telling us about the great things that JMMB is doing. It's always a pleasure to have you on the program, Keith. Well, folks, to our viewers, be sure to look out for future updates on our virtual investor forum by following us on social media. We share all things forum-related on our social media pages. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited. Keep safe, folks, and remember, wise investors, slow and steady wins the race. Goodbye.
The Mayberry Investments Limited Virtual Investor Forum has been the standard for investor education in Jamaica for decades, where top financial minds provide comprehensive insight into the market and ideal investment strategies and opportunities for our clients. Celebrating 37 years of excellence in investment banking. The Mayberry Virtual Investor Forum, investing in Jamaica.